everyone, welcome to SVG channel. I'm Elaina. Today we have with us Mr. Greg Hitchan, co-founder of Tri-Valley Ventures, a very successful venture capital firm in Silicon Valley. Welcome.
Thank you for having us.
And Jonathan Ting,
Yeah.
he's the research analyst of Tri-Valley Ventures. Welcome.
Thank you.
Thank you for joining us today. So Greg,
Yes.
how did you start your journey into becoming a venture capitalist?
Well, I started my investment career about 20 years ago with a big, large San Francisco-based investment firm called Blum Capital. That firm's been around for 20, 30 years. And it was a real great introduction into investing in general, into private companies, into public companies. And then about 7 years ago, I had the opportunity, my family is here in the East Bay, the lower part of Silicon Valley, or Silicon Valley East, that we talk about. And I had the opportunity to try and invest closer to where I live. Didn't want to have to commute long distances anymore. And as I raising a family here, we got to know a lot of the companies and influential people in the area and realized there's a great opportunity to invest in our own backyard. And I met Launching Pad, who has been a great partner from the beginning, and saw that same kind of opportunity here in the Tri-Valley. So my career has been about 20 years, and the last 3 or 4 have been focused primarily on early stage venture companies regionally here in the Silicon Valley East.
Oh yeah, I noticed that you started the first venture fund in Tri-Valley area, right?
We did. Yes, go ahead.
Why do you choose Tri-Valley? What potential do you see in this area?
Yeah, that was an easy decision for me and my partners. We all live in the Tri-Valley. Mm-hmm. We all have businesses and relationships here, long established relationships, and I think we all knew we were going to be here for a long time. That made the identification of this area as a very, very easy one for us to make. We also knew a lot of the demographics of the area, which include a great talent pool of people who were, in prior years were working in San Francisco or in Palo Alto, but raising their families here. So everyone would love to work closer to home, better quality of life, etc. So we knew a great talent pool existed. We knew there are a couple national labs in Livermore that are part of the brain trust of the area. A lot of postdoctorate and incredible science and technology being developed there. And the area also had a legacy of several big public companies that had been here for years. PeopleSoft and now Workday and Viva and many others who all feed that early stage ecosystem, right? A lot of those successful entrepreneurs, they're living here, they're looking to start their next company. What we did was form a venture fund focused regionally on taking advantage of those opportunities, investing in them early, usually because we know them or knew them, or there's a relationship that facilitated that investment, and then picking the best of those investments for our investors to give them a good return on their investment and grow great companies here.
Yeah. And could you talk about the industries that you invested in and the companies in your portfolio that you're personally excited about?
Sure. I'll let Jonathan take the first part of that because he does almost all of our research on the trends in the area and different verticals that we invest in. And then from that, I'll tell you the few that I'm most personally excited about that we think are going to be very successful.
Sure.
So the area is very interesting if you compare it to other areas in the US and even within California. So going back to sort of when we started the fund, we started with a sort of blank map on what does this area, this region even look like. So if you look at the publicly traded companies that are headquartered in the Tri-Valley and create an index of them, over the past 10 years, they outperformed the S&P 500 by about a factor of 9 times outperformance. So there really is something here, like Greg said, which is the highly talented, highly educated people, the good quality of life that they have and the fact that we're so close to the Silicon Valley where a lot of the talent comes over. So when we look at the industries that are thriving in this area, they happen to be tech. They happen to be life sciences. A lot of the older life sciences companies were headquartered here.
So from those industries, which Jonathan mentioned, life science and biologic technologies, SaaS companies, software companies, there's some pretty hard engineering, and what's the fourth I'm missing? AI.
Yeah.
Most companies have some artificial intelligence component, and we see quite a few of those. So our portfolio today has 13 companies that we've invested in over the last 3 years. The few that I'm most excited about now are one is called AI, AEYE, which is a confusing name when you're talking about, and they're an autonomous vehicle company that is creating an artificial eye. So effectively creating LiDAR and camera technology that will allow a car to see as good as a human eye can perceive an environment. So that's exciting. And as that industry's gotten more advanced the last couple years, their technology's gotten better and better. And there's a lot of big multinational players who are spending incredible amount of money in that space to develop it. We think they're going to be one of the 2 or 3 surviving companies that are going to be built into hopefully autonomous cars that we all drive in the near future. And then there's a couple other life science companies that we're very excited about that are creating a non-invasive continuous glucose monitoring device using radio frequency, which means you never have to prick your skin for any kind of vital sign. You can use radio frequency to read your blood sugar, and for the vast, huge majority of or a huge market of potential worldwide market of diabetes patients, that's kind of a holy grail solution. And that's being built right here in San Ramon and Pleasanton in this area by a bunch of very experienced life science executives, and we're fortunate enough to be in that network. That's a funding opportunity where we can help them with capital and connections, and those are 2 I'm excited about now, but I could tell you about every one of the 13 because if we're invested in them, we're excited about them in some way.
Sounds exciting. Some of the technologies I never heard about. Yeah, and as you mentioned earlier, Launching Pad is one of your LPs and has had very good relationship with you over the years. Could you talk about your collaboration with Launching Pad?
Sure. No, they've been great. Launching Pad, we knew each other even before we started the first fund. And I think when Launching Pad started this effort in the East Bay and this bridge to China concept, and it was very appealing to us when we thought about what we're building, an ecosystem that invests in local companies primarily. Geography goes away pretty quickly. And while a company may have its local headquarters here, they need to be thinking and operating globally. And to do that, you need partners and relationships, and Launching Pad has been that for us. In numerous investments that we've looked at, the team here, Cindy and others, have been able to make connections for our entrepreneurs to talk, to accelerate their international strategy or a valuable relationship in China on the manufacturing or some other side. So it's been a very collaborative effort. It's kind of how we invest through relationships and who you know. And I think that's even more important nowadays, where because of the pandemic and restrictions on ability to travel and meet in person, your existing relationships are even more valuable. And we've seen since the pandemic in the last 6 months, even more emphasis on finding relationships locally. How do you build a business where you can't travel like you used to? And you can still do it just in this new paradigm where you know somebody who can help with that. And that's Launching Pad to us, as well as being an investor and a very loyal investor looking for more opportunities, bringing opportunities to us. to look at. So it's very collaborative, and I can't say enough about the team and what they've done so far. So we look forward to that lasting for many, many years.
Thank you. And from your experiences, what are the major trends in the past few years, and what are your market predictions for the rest of 2020 and beyond?
I will do the venture capital part of that, and Jonathan is very well prepared to address those bigger market trends because he does a lot of work on that front. In the venture capital world, this funding of early stage companies, there's been quite a divergence in the size of funds doing it. A lot of the bigger traditional funds have gotten bigger and bigger over the years. They've raised more and more capital. That's great for companies at a later stage in their financing, but it's created kind of a problem for early stage companies who need to raise their first $1 million, their first couple $1 million, as they're just getting started. Those investments are too small for the big firms to make traditionally. So there's kind of this gap in funding, and what's resulted from that is a lot of firms like ours who take a smaller approach, more concentrated approach, use our differentiator as a kind of experts in the area and knowing kind of all of the opportunities in the Tri-Valley, and really focusing early in a company's life cycle where we can add the most value. At some point as that company grows, it will need the capital and the resources of the bigger firms. But there's been a real trend towards smaller, specific venture funds who can fill that gap and help earlier companies before they're ready for the big 12 names that manage billions and billions in venture capital money. So that's the trend that we're seeing. That's the trend we were built for, and that's going to continue for quite a while on the venture capital side. On the bigger market predictions, he can tell you a little bit about that and what we think.
Bigger market predictions can always go wrong. But if I sort of rewind and see where the just VC in general was at the end of 2019, we're having a lot of growth companies come up, and valuations are sort of getting high for a lot of these companies. And then we see companies like Uber try to go public, or companies like WeWork try to go public, and we saw what happened there is they got hammered. The public markets didn't like the fact that they had no clear path to profitability and they were just burning money. So companies like that really got hammered, and there was this period of time, just a couple months, where I felt like the industry and the public markets together sort of changed their vision on, growth might not be worth it. What might be important is having the right unit economics and showing that you can become a profitable standalone company, which is something that over the past decade, no venture-backed company had to worry about. But then COVID hit, and we had a lot of changes in just the monetary system and the entire US economy. And now I think if you look at the recent IPOs that came out, if you look at JFrog, if you look at Snowflake, those aren't profitable companies, and they're now trading in the 100 times revenue valuations, which is crazy. So I think if you want to look at the macro trend of how investments in these areas will go, you really have to look at the cost of capital and what the cost of money is. As the cost of capital comes up, you're going to see investors worrying more about unit economics and profitability. But when the cost of capital is low and near zero, where it is today, we're back in that risk-on mode. We're back in that growth at all costs mode. So, the Federal Reserve has said that they're going to keep interest rates low till 2023, but we'll see how things shape out. And it's sort of my hunch that we are going to see inflation come back into the system, and when inflation does and the cost of capital comes back again, certain companies will do well, and certain business models will do well. But I'd say for anybody trying to start a business today, having that path to profitability, in case the cost of capital rises again, which it will, is very important.
It's a good point. As those big funds raised more and more capital, more and more venture dollars were available, you've seen those concentrated into those big later stage deals, the big names that everybody's known about. because they had to invest huge amounts. You could only do that in later stages of companies. I think that will change. To Jonathan's point, we've always emphasized that the companies we invest in capital efficiency, not just raising as much capital as you could and growing as fast as you could, but building business the right way. And I think that's reflective in the demographic too, right? If you've been through business cycles before, you don't get caught up in the latest craze. You're fundamentally building business that has a path to profitability and path to its next funding round. And it sounds a little old school, but
that's the most important thing.
They're building real businesses, not something that just looks good to get funding. And that's the kind of businesses. That's the only kind of businesses we know how to do, and that's why we only invest in those kind of businesses. And fortunately for us, there's a great opportunity set of those just in this region that we have a lot of first looks at, and that's a good position to be in. So we're finding great companies for our investors.
Thank you.
Good.
Thank you for joining us today.
Thank
and
you.
I hope you can
Thank
share
you.
more in our future videos.
We look forward to it. Thank you for having us.
Thank you.
Thank you. Thank you all for watching. Please like and subscribe to SVG channel. I'll see you again in our next video.